Welcome back. You're with us on Trading Hour. Well, as promised, we are going to get a conversation started on the defense space. There's a Anand Rathi note which is expecting the Indian defense market to hit $55 billion, I believe, in value. We'll have some more numbers coming up in just a bit. We have Prashant Rao, Director and Head Equity Capital Markets, joining in from Anand Rathi Investment Banking. Prashant, thank you very much for joining in. So it's a pretty exhaustive note that you folks have come out with, talking about the growth in defense expenditure, the size of the market itself. Let's start with some of the headline numbers, the ones that really define the defense opportunity for the companies in the listed ecosphere.
No, thank you so much, and good morning to you, Surabhi, and thank you so much for having me here. So before we break up, let's put things into perspective, right? So before now, in terms of the players in the ecosystem, if I need to break that down into three parameters, so you will have the component manufacturers, you'll have the sub-assembly manufacturers, then you'll have obviously the platform manufacturers or the assembly manufacturers. Now, when you go into each of these segments, the market sizes are large, right? When you are looking at a total, we predict the entire defense market to be close to $55 billion by 2035. That's a very large number that you're talking about. And then you start breaking it down. Now, the government recently on the import side has listed down several negative import lists. There are close to $130 billion worth of orders which have been placed for modernization of the fleet, which is into all the three cases of the Army, the Air Force, the Navy, and the Army itself. So when you're talking about these large numbers, and especially companies which are already there, you have the larger DPSUs which are doing really well, but there are several of these smaller private players which are coming into the forefront, and they have now from a component manufacturing now evolving into the value chain into a sub-assembly and an assembly manufacturing.
Prashant, morning, this is Reema here. So $55 billion is a very large opportunity, right, by 2023. What's the current size?
So if you look at it, see, the current size on the defense side, maybe, we'll have to work out the numbers. But even then, if you look at it, it'll be close to, let's take, for example, a $10 billion sort of a number. Now, but when you go into it, the current production, currently we are at close to 1 lakh crores that we had achieved in FY23. This number, the government has a very ambitious plan to reach to $5 billion over the next couple of years. So these are very large numbers that you're talking about on the defense production side.
Okay. You must have studied the companies too, right? And I'm not getting into a stock call, whether one should buy and how the valuations are looking at, but just purely from a listed universe, because there are multiple plays across the various segments that you highlighted. Which companies have, have a track record of being able to execute, this opportunity which lies ahead?
So I'll tell you, when you're looking at the listed side, first of all, it's very underrepresented, right? You have the large DPSUs on the listed side, then you have smaller companies on the listed side. So when you look at it, you'll have to look at the order book scenarios of all these players. When I'm talking to you about $130 billion in fleet modernization, exports which are already at 20,000 crores, going to go up to 50,000 crores in the near term, imports which have been declining. So when you're looking at these, the order books of these companies then take precedence. And primarily, we are seeing Air Force being the highest component of this entire order book scenario. Then comes Naval, and then comes, the Army. So companies which are into all these segments are obviously going to do well. There are companies which are now coming into from on the drone manufacturing side, counter drones, as what we have seen in the recent episodes, the world has seen. So all of these, when you put together, you'll see growth in all these aspects.
So you're saying Air Force largest in terms of potential order pipeline, followed by Navy, right?
That's correct.
Okay.
So just to give you this one, Surabhi, so the Navy has this one of reaching 175 ships by 2035. So that's a very large number you're talking about. And when you're looking at those numbers, when you combine the Air Force and Navy and Army put together, there is a huge potential, just not for assembly manufacturers. That's what I was saying. So when you're looking at component, now there are high precision components. There are hundreds and thousands of these components which are required, let's say for example, a fighter jet or a ship. And that's how it flows down to the smaller players in the industry.
Sure, got it. Prashant, absolutely no taking away from the opportunity that you just described, and those numbers are looking absolutely, fabulous and rather mind-boggling. Now, the question from an investor's point of view is what's left on the table to play? Because, listed stocks have run up so much in the last 12 months. A stock like Cochin Shipyard, for instance, is up over 700%. That's an 8 times gain in 1 year alone. So the worry is if someone joins this party now, are they likely to sort of get their fingers burnt?
So I'll tell you. So what's important is, so when you're looking at defense has always been in a sweet spot for the last couple of years, right? And a lot of these companies have surged close to 200, 300, as you are saying, 700% in some of the cases. But it's also important to understand post-pandemic, the market has also moved 50%, right? So, and there is obviously been an exuberance and a euphoria around the defense space, and hence you're seeing a lot of these surges happening. So in terms of PE multiples, most of them are trading in between, let's say, 40 to 140 times. You might see some sort of a correction happening, but these corrections are actually healthy. It basically then makes the valuations more rational and sustainable going forward. So, but once you look at the opportunities and the order book, so give you an example, HAL is sitting at an order book of close to 94,000 crores, some others at 76 and 50,000 and all those. So these numbers are massive. But the question is whether those executions of these orders start funneling down to their revenues. Once you see that happening, obviously the performance on the stocks will also go up. Now, so
absolutely. Yeah, absolutely. Yeah. So let me actually, ask you a follow-up over there. Which are the companies or which are the entities which are likely to have a better execution rate, right? Because at the end of the day, it is that E of the price to earnings, which will justify even higher multiples given the rally. So would it be large PSUs like an HAL? Is that where you have maximum confidence? Could it be private players, some of the smaller private component manufacturers that you alluded to?
So I'll tell you, so obviously the DPSUs, the large players are going to have a very sustained growth going forward. But you'll see those type of real binary jumps happening on the smaller players. So I'll give you an example. A lot of these private component players are, as I said, have now evolved into a assembly and sub-assembly. Companies like, let's say, Paris, which are now making complete periscopes into the entire ecosystem. So that's a change which has happened. And you'll see a large number of these smaller private players coming into the fray for component manufacturing, high precision manufacturing. So all of them, so I believe it's going to be a mix of both a very large extent private players taking the cake in terms of the growth, in terms of revenue.
Okay. All right, Prashant, we will wrap it up on that note. Thank you very much. Good to have those insights and look forward to understanding more as we progress. Perhaps after the July budget, we'll have a better idea of the final defense spending numbers from the government, and then let's see how the market reacts to that as well. Thank you for joining in today and wish you a good rest of the day as well. We'll take a quick break on that note, come back on the other side with more on the markets.